There's $84 trillion of wealth, owned by US baby boomers. They broadly invest through registered investment advisors. You call your broker at Dean Witter or Morgan Stanley or AJ Edwards and say, hey, what's my portfolio? Put a little bit here. That is the ETF process, and it has just started. And until you see a government, both Dems and Republicans, that say enough, we are going to go back to a Simpson-Bowles balanced budget amendment. We are going to cut spending from 25% back to 18 or 19%. Bitcoin is going to keep going higher.
Bitcoin has really been driven by both the macro and micro forces.
The volatility in Bitcoin, I think, is one thing that really attracts a lot of institutional investors.
It's very hard to make an argument that Bitcoin is not going much higher.
The Bitcoin spot ETFs have traded for about 90 days now, and are approaching $100 billion in combined market cap. Compared to any other ETF launch in history, it's ridiculous to imagine that in a mere 3 months, these ETFs are approaching the $100 billion landmark. But in spite of their performance, most of the hype around the ETFs has cooled off. Reports of daily inflows are no longer as regular, and it seems many think the impact of the ETFs is largely over. Today's CEO of Galaxy, Mike Novogratz, explains that we have not even begun to see the extent of it. He starts by discussing the ETFs and explaining that there is currently about $84 trillion of baby boomer wealth that can now flow into Bitcoin through these ETFs, and that while slow, this staggering wealth will find its way to Bitcoin. He talks about the concept of price discovery and discusses how Bitcoin will also continue to be pushed forward by the fiscal irresponsibility of nation-states. Sit back and relax as we bring you clips from the interview.
Bitcoin is a macro asset. Like, what got me into Bitcoin in 2013 when it was trading at 98 bucks was somebody called me and said, look into this thing. And I was like, macro asset. And I was a macro trader. At that point, the story was inflation was coming, right? We had 2012, the European financial crises, and everybody was worried about inflation. It's funny how the consensus can be wrong sometimes. Paul Singer, he might be one of the greatest investors of the last 30 years, runs Elliott Advisors. He took an ad out in the Wall Street Journal and the New York Times wanting Ben Bernanke, the chairman of the Fed, to go to jail for what he was doing with QE2. Not kidding. And it was signed by 50 really intelligent people. They were so worried about inflation. And so that's why I thought, oh, you buy Bitcoin, it's got an inflation hedge. China was buying it. There were a lot of people that had lost faith in governments, right, post-financial crises. And so I was like, macro asset, buy some. And I remember looking at the chart and saying, this thing's gonna go to 1,000. And sure enough, it went to 1,000. Matter of fact, I was on the cover of the FT. The only time I've ever been on the cover of the Financial Times, where I was at a conference like this, I didn't know the press was there, and I said, Bitcoin's gonna go up because this, and this, it's gonna go to 1,000. And August 2013, you can find it, there I am. I got hooked with this idea that, and you talked about this, it was the first asset that started from the little people, right? It wasn't an institutional asset where at the end the taxi cab driver buys it and it's time to sell. It was a global revolution, and it was the first global asset. In 2017, when we had that great bubble, that was fun, right? It was more of an Ethereum-led ICO, Bitcoin to 20,000. I remember saying over and over, like, this is the people's revolution. Mr. and Mrs. Watanabe in Japan, Mr. and Mrs. Kim in Korea, people in India, in Africa, in Nigeria, all over the place participating. There are no global markets, really, right? Gold is a global market, but in the 1999 tech bubble, that was a US bubble. There was a few people that participated in outside, but broadly Japanese people buy Japanese bonds. And so here's the first global asset. And it was, people driven. And so I started this way, way early, this tagline, the herd is coming. And, boy, did I feel silly for years. I was talking about the institutional herd.
When the institutional herd is discussed, the most common first thought is investment management companies like BlackRock. But even these entities only represent a small portion of the actual institutional demand. And more importantly, they have not begun to allocate into these ETFs yet. Most of the inflow is still retail. The good news is that the spot ETFs provide the perfect gateway for other institutions. And as time cements Bitcoin's position as the de facto asset, the spot ETFs will allow Bitcoin to live up to its potential of being the first truly global financial asset. Mike expands more on this concept. Let's head back in.
So Bitcoin has and always has had, and probably always will have, two vectors that drives price. The two vectors have always been macro. Why Bitcoin, right? And so that's the same broad story as gold, silver, other hard assets, and adoption. So right now, adoption's way overwhelming because we've just tapped into, so here are the numbers. There's $84 trillion of wealth, trillion, owned by US baby boomers. Baby boomers are broadly 60 to 80 years old. They are entering into their die-off phase. They broadly invest through registered investment advisors. You call your broker at Dean Witter or Morgan Stanley or AJ Edwards and say, hey, what's my portfolio? Put a little bit here. That is the ETF process, and it has just started. And so early, big adoption, a lot of the smaller platform regional brokers have been buying, but a lot of the big platforms like Morgan Stanley, and they're still not selling yet. They're going to, they're getting prepared to. You can buy it on their platform, but the salesmen aren't selling it. What's the macro story of Bitcoin? It's relatively simple. Our government can't keep its pants on and is spending too much money. And when you spend more money than you take in, you depreciate your currency. And that problem in the early 2000s, 2007, 8, 9, 10, 11, 12, to a crisis with Donald Trump. We're now running structural 5, 6, 7% deficits. In a good economy, Keynesian economics says you're supposed to run deficits in a bad economy and run surpluses in a good economy. We've normalized spending 25% of GDP on federal government. That's this year's budget, next year's budget, the following year's budget. That happened like this. It happened between Trump and Biden, and that's insane. If you take the Congressional Budget Office's predictions, which are always rosy, they always are more optimistic than they should be. In 25 years, it has debt to GDP at 250%. Like, that is a recipe for housing prices going higher, Bitcoin going higher, gold going higher, silver going higher. And until you see a government, both Dems and Republicans, that say enough, we are going to go back to a Simpson-Bowles balanced budget amendment. We are going to cut spending from 25% back to 18 or 19%. Bitcoin's going to keep going higher.
The US national debt is currently growing by $10 billion every single day, equivalent to $1 trillion every 100 days. While this is truly alarming, Mike explains that it is partially responsible for Bitcoin's continued success. But even more exciting is the effect of the spot ETFs. In Mike's words, we are merely at the beginning of this process, and contrary to what media hype might insinuate, there are much better times ahead. Aside the massive $84 trillion in baby boomer wealth that can now easily access Bitcoin, institutions have now been put on notice due to the work of people like Larry Fink. In related news, BlackRock recently announced the launch of a digital asset fund called the BlackRock USD Institutional Digital Liquidity Fund. They've launched this fund in collaboration with asset tokenization firm Securitize. This move confirms Novogratz's prediction about the exploration of tokenization by BlackRock and other institutional bodies. To wrap up the interview, Mike discusses more on BlackRock and gives us his price predictions.
We should all give Larry Fink a standing ovation, right? He was a Bitcoin skeptic and he realized, wait a minute, these guys aren't crazy. That is the process of how Bitcoin evolves. Larry has a far bigger platform than I'll ever have, and thank the guys that got him to see. I think that's staggeringly important. BlackRock's the largest asset manager in the world. He's one of the most recognized thinkers. But it's now not just Bitcoin and the ETF. They announced this week they're filing with the SEC to do a tokenized digital assets fund. So what are they going to tokenize? I mean, Larry said it. They're going to try to tokenize money market funds, and that would be revolutionary. I don't think they'll get that through, but that's what they're going to push. And so you're going to see, not in the next 3 months, but in the next 3 years, assets get tokenized, minority stakes in sports teams, funds, real estate maybe. And so I would tell you that every bank, every big bank has teams working like crazy on this idea because they're scared. If we move to a tokenized world, Goldman Sachs better be in it, Citibank better be in it, Bank of New York better be in it. So there's a lot of activity in institutions around that piece. There's a lot of activity around, okay, Bitcoin's here, the ETF is here. It had a greater start than any ETF in history by a quantum. I tweeted this a minute ago. The American people just voted. They voted, they like crypto, they like Bitcoin, they like digital assets. And so bank CEOs, bank boards, Congress has to take note.
Leave us with your price prediction for this bull market.
Yeah. Markets rarely take out 3-year highs that are 300% up and just keep going straight through, right? They correct. And I said, well, maybe it could go to 53,000. No, I think I jinxed us. So I apologize. It feels like 53, 55 should be the floor. We're at 62 now. I hope 60 is the floor, and it's going to take some time before we take out that 73 again. I really do believe that within 12 months, we're significantly higher. You know, when you have a whole new world starting to buy, you go into price discovery. And so I can draw a line and say, like, listen, 100 was my target because it felt like a good round number. How do I even think about Bitcoin conceptually? I think of gold. Market cap of gold is 13 trillion. Market cap of Bitcoin right now at 65,000 times 2 is what, 1.4 trillion? So we're like 1/10 of gold. Could we be 20% of gold in 2 years? Of course we could. What I say earlier, 85 trillion of wealth in the United States between 60 and 80 years old. As they die, that money goes to younger people who are much more comfortable with buying dog with hat or Bitcoin or Ethereum or Solana.
There will be some correction along the way, but prices will be significantly higher in 12 months. That's the summary of Mike's price prediction for this cycle. Mike has given in-depth analysis into Bitcoin, institutional adoption, the state of the nation, and how all these things interact. Overall, the coming years look good for Bitcoin. What do you think about Mike's opinions on the fiscal responsibility of governments and their impact on Bitcoin? To see the latest in crypto news, watch this video here.